Hello everyone, welcome back to my channel. So this video marks the end of the week number 78 in this road to 100k realized return challenge, and this has been by all standards a quite volatile week as well, yet again, similar to the last few ones. And the main topics this week were that coming up from last weekend, as we mentioned in the last video, that there were some tariff threats from US President Donald Trump on a few European countries which were opposing the US administration attempt to take over Greenland, but this stance softened up considerably by midweek, and apparently some sort of agreement may have come out between the meeting following up a meeting between the US president and the president of NATO, the Dutch former Prime Minister Mark Rutte, and stocks and the markets basically breathe a sigh of relief, and a rally ensued. And so but for the most part, and when it comes to the economic data, we have not so much to talk about this week. This was a shortened week, so there was no activity on Monday. The market was closed. There was also no economic data coming out on Tuesday. Wednesday, was not significant as well. On Thursday, though, there was a revision of the GDP by 0.1%, or by 0.1 percentage points, basically on the back of higher exports and investment as well. But still, the main highlight of the day was the PCE, the personal consumption expenditures, which is a preferred gauge for the Fed to assess what's the state of inflation. And even though it came pretty much, as you can see, in line with the expectations, of course, even though the year over year, both the headline and the core was 0.1%, 0.1 percentage points up the previous month. Still, it is above target, and so that is probably cemented even more the expectations that the Fed will keep rates steady in the following meeting, which is next Wednesday, by the way. So as you can see here, it is all but certain that the Fed will keep interest rates unchanged this month after three consecutive meetings of interest rate cuts. Now, so there was some consumer sentiment on Friday, which was positive. Here it went above expectations, 56.4, which means there was an improvement, even though there were still concerns reported by consumers about inflation and quote-unquote affordability, the cost of living. But still, this was a positive sign. And also on Thursday, I forgot to mention that the jobless claims came also below the expectations. They were expected 208,000 new jobless claims applications, and it came just at 200,000, which is of course a positive development. And this, coupled with the data on the inflation, this cements even more the fact that it's extremely likely that interest rates will remain steady this week, on next week. And so basically this is what happened. And yeah, these are the news pieces about these economic developments. Now, in terms of the market itself, following up on what happened on Tuesday, in which I disclosed what basically transpired over the course of that day when it comes to our trades. We were forced, because the markets tanked on Tuesday, we were forced to sell calls on the Qs with a very low price, or a very low premium rather, 33 cents. This is of course not what we hoped for, but in even in that case, we had sold a put here on the QQQs, on the 606, but because at this point in time, it was apparent that this put would expire pretty much worthless after the markets tanked, and probably what I'm going to do, I'm going to duplicate this. I'm going to duplicate this screen so that I can show you as we go along the graph basically what happened. This is the weekly graph of the Qs, and by this point at the end of the day on Monday, the stock continued to come down, and it came very close to the 606 strike price. If we recall, we had sold a put on the Qs on 606, but by the very late in the day, it was very much apparent that the 606 strike price would not be reached, and it was not. And so even though this put was very close to was almost at the money, but still out of the money, and it was going to expire a few minutes from this point, we decided to buy the back at 4 cents. So between 1.17 and 1 euro, $1.17 and 4 cents, we managed to keep most of the profit on this put. But then, because there was a chance, in my view, that the stock could tank further or could go further down on Tuesday, I decided to roll over down, and so I bought back this put and then sold another put expiring on Friday. So you see, yesterday on January 23rd, but with a 600 strike price, because if we manage to be assigned with a price of 600, we would be able to lower our cost basis of our Qs up as down to 625, and this would allow us then to sell calls on the Qs at 625 strike price. However, this was not the case, and you can see then the stock recovered quite quickly here. There was a big upswing, even though it came down during the day, but still, then I think it was at this point in time that the news came out that an agreement has been reached between the US president and the president of NATO, and then the stocks basically rallied at this point, and this put, the 600 put, as you can see here on Thursday, it was almost with very little value, and so in between just two trading sessions, it went from 262, which was the price that we received, the money that we received, and we bought it back at 10 cents, and so this ended up being a quite nice profit from this trade. Here it is, yes. So we managed still to get this return right here. We managed to collect about a 50% return annualized. The first one, the previous one at 606, as you can see, it gave us even more, almost 67% in profit, which was, of course, very good. And then, because the price had gone up, we decided, all right, it may still be worth it on Thursday to try to sell the 612 put, because if the stock pulls back, and keep in mind we were somewhere around here, if it comes back to 612, we may be able to be assigned and bring our cost basis down to 627. However, this was not the case. The price continued to recover until the end of the week. And because of that, we decided, all right, let's let this let's keep this put losing value. And so by Friday, also because on Friday it was very much apparent that the 630 price will not be reached, and so the calls we sold on Monday were almost without any value, and so we decided to buy those back at 2 cents. And keep in mind, at this point, we still have on Friday we still have this put on 612, and because we still want there was still the opportunity to squeeze some more profit out of our out of the options that we had available. I decided to also buy back the put that we sold at the beginning of the week on the RKK at 2 cents. So if this, after having received 43 cents on it, we bought it back at 2 cents, and with the buying power that we had available, which was also reinforced by the possibility of buying back the 612 put at 19 cents after having sold at 55. We sold two puts on IWM with a 266 strike price, and we were quite conservative. This was a 0 DT option. This would expire on the same day, as you can see here, and we went quite conservative. We used a 12 delta put, and because we bought back these calls at 2 cents at the beginning of the trading day, and because the price was rather stable at around 620, I decided, all right, probably because some recency bias during the last weekend, things have gone pretty much horribly for us because of the threat of new tariffs. Let's just play it safe. There is a lot of premium to be captured if we roll over the calls for next Friday. And so we decided, especially because of all the volatility events that will come next week, but I will get to that shortly. I decided to sell the puts, the calls rather, at 630, expiring next Friday, January the 30th, at 235. And so in this case, we basically guaranteed the 1175 premium for next week, and so that's why it won't count for the profits this week, because this position is not yet closed. But then we decided to use our buying power, as I mentioned, to sell two puts on IWM 266, and with the remaining buying power that we had, we still managed to sell a put on Nvidia with a strike of 185, and we received 30 cents on this. And we also went conservatively on this, relatively so. This was a 14 delta put for Nvidia, which, as you can see here, expired worthless. All right, so here it is, it expired worthless, but we were assigned on the IWM, and because even though as you can see here, the price went pretty much up during the week, but on Friday it was pretty much an offset of what happened in the days prior, and it basically pulled back immensely, and now we are stranded with a stock bought at 266. Here is the 200 shares bought at 266, and so now we will have to next week sell some calls on IWM to basically complete the wheel on this one. But still, it was not the scenario we wanted. But then, keeping in mind the volatility events that will occur next week, chances are we will be able to still capture basically a good profit out of these shares. So we managed to get, never mind this 215. 215 is is just the difference between the 266 and 263.85. So this is a mark to market value. It's not really relevant at this point. So we still came out with a premium. We still kept the premium on this trade, and so now our profit for the week is just a little bit above 655. So yeah, but of course next week will be much bigger because we already secured 1175 from the calls that we sold on the queues here. Now, considering this for next week is going to be a very, very important week. Why is that? Because it's going to be the week in which we have the Fed meeting on Wednesday, even though this will probably be a meeting in which there is relatively low volatility regarding this event, because it's pretty much certain that rates will be kept steady, and so the focus will be on the guidance that the Fed Chairman Powell will give for the interest rates moving forward. And so, yeah, there are some durable goods orders on Monday, but this doesn't move much of the needle. Consumer confidence, it's the same. Jobless claims may do something if it comes very much far off on the up or on the down the expectations. And so, yeah, there's some PPI on Friday, but still it's never as important as the CPI or the PCE. And then there is some other economic data which is not that relevant now. But this is going to be a very important week because of the earnings. There are some high profile earnings releases next week. I think on Monday there is not that much as far as I can see. Of course, this list is never 100% accurate, but it gives you an idea of what is going to come. So on Monday there is nothing remarkable here. On Tuesday there is General Motors here, Polaris maybe, Invesco as well, Boeing, yeah, I think on Tuesday, Bridgewater, but yeah, Texas Instruments, yeah, but pretty much the powder will remain dry, I think, until Wednesday. This is the day of the Fed meeting, by the way, and I think there's going to be some important releases here. ASML, which probably may have some impact on the chip companies here in the United States. So MSCI, Starbucks, AT&T, Microsoft, and Tesla. Yes, these are very, very much on the radar. These are high-profile ones. These are very likely to spark a move on the queues. So these are important releases because they are the Magnificent Seven, part of the Magnificent Seven. And Meta, yeah, Facebook is also releasing its earnings on Wednesday. So this will be a super Wednesday, shaping up to next week. Yeah, and so this is pretty much it for Wednesday. For Thursday, Samsung, Deutsche Bank, Visa, yeah, that will probably do something. SAP, Lloyd's, Dow, Caterpillar, maybe, Xerox. I think there's at least another company, Nasdaq, another high-profile company that will report earnings in the week. Mastercard, probably. Blackstone, Invesco. No, this is not the one. The Invesco was the other day, earlier in the week. Bancor, DXC, Apple. Yeah, Apple is going to be a big one on Thursday. So, and usually on Friday there is not much when it comes to earnings releases. So let's see, Chevron maybe, ExxonMobil. So the energy ETF may probably have some volatility in store for late in the week. And yeah, that's pretty much it. So three of the Magnificent Seven companies will report this week. For those who don't know, usually Nvidia is the last one and it comes pretty much later. But yeah, it's going to be, especially Wednesday and Thursday, they are going to be big days in terms of releases. So that's also another reason why I decided to already secure this premium for the 630 calls. But yeah, we'll see what happens. And also the IWM, probably when it comes to selling the calls on this one, we'll probably do the same thing. We will not sell calls 0 DTE, because yeah, also chances are, because the stock came down to 20, there could be a pullback, but it's going to have to be a pretty large one to get back to 266 in one trading day, and we want to capture this volatility premium on on these earnings. And so most likely we will sell some calls at 266 expiring on Thursday or on Friday. So this is something that we will have to see, but of course at least at 266. Let's see what happens. So for now, that's pretty much it. Next week is going to be a big one. We have all the 5 trading days coming up. So yeah, feel free to leave your comments in the comment section down below. I'm also available on LinkedIn in case you need to ask me any questions. And as always, feel free to like the video and subscribe to the channel. And we'll reconvene at either on Monday evening or on Tuesday morning to start the week number 79 in this challenge. And yeah, I'll see you there.